extreme bullish move has been seen in US crude. Last week it has rose almost close to 15% in a single week, in a single biggest rally since long. Now I hope you all profited as we expected, that beyond $80 levels, if it sustains and then if it breaks past 84-86 zone, certainly you can expect more bullishness. In fact, it has breached $90 levels and the resistance at 92, also closing at 92.4 levels. Now what can be expected next week, whether it is going to remain bullish from here or we can expect a reversal, we will see with the help of charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. Pressing on the bell icon will keep you posted about the latest updates as I share my daily analysis and along with targets and entry points very early in the day with the Asia session. So definitely it will help you in your day trading decisions. So do press the bell icon. Now let's start. First on the weekly charts, what we saw last week, yes, there is a fair bit of bottom still available in US crude, and yes, there is a possibility for it to drop till towards 70-74 zone. Yes, this is a strong support zone, but it has reversed precisely from close to above 76 levels itself. Now at the same time, last week we had expected that if it continues to drop from here, we can expect a larger, sharper drop which might take it till towards the bottom out there. It failed to do so, it has reversed. But at the same time, another observation one must take to account is the highs of this channel. This is a long-term weekly charts channel and you can find out this is the highs of this channel, and precisely it has touched the channel out there, and next week we can wait for it to break out. If it breaks out beyond 93.2, certainly that is the level beyond which we can expect another round of bullishness in US crude. Then you can expect that it is going to hit 94.5, 96 and 97.2 and 98 levels. In fact, beyond 98 you can also expect it to rise past $100 levels. Now $100 levels is going to play another important role there. Trading above 100, certainly we can expect further more bullishness, taking it till towards 104.5 and 108 levels towards the end of the month. Be careful, if it tries to break this zone, only then and then only it is applicable. Remember, this is a single bullish candle, a flat top, flat bottom, single Mariboju candle, and it also indicates that the next candle will decide which direction it wants to take. Possibly once you see it trading below 90 and then 88 levels, below 88 you can expect more bearishness can be seen there. You can expect 84.5, and then if it breaks past the zone at 83.5, certainly more drop can be expected. Taking it below 18 will call for more bearishness. See, if it can gain 15% in a week, it can also reverse the gain in the single week. You have to be very careful here. Any breakout on the upside should be considered that as a bullish indication, and then we may see it rising more. Then it can try to further achieve the highs out there. So be careful here. Now this is on the weekly charts. Let's have a look at the daily charts also. Now look at the daily charts. Similar is the observation, lower highs, and this is the highs of, this is the top of this channel in which it is trying to trade. The bottom is still far away at 70. The highs, if it continues to trade above this zone, certainly you can expect 96, 98 zone, 100 zone, and then we can expect it to further achieve the highs at 108 levels towards the end of the month, and beyond that is also possible. So you have to be careful here. At the same time, look at the last 4 candles here. Now see, this is the charts here, last 5 candles, that is this week itself. You can find out trading below this zone at 90 and 88. This will call for more bearishness here. If it drops below 88, certainly we can see 86, 84.5, and then below that also on the lower side 82, 80 levels can be expected. Yes, this is another observation as it is trading at the extremes of this channel out there. So this is just on the daily charts, and if it is bullish, it has to give you a breakout, and the breakout should be strong enough so that it can, the reversal itself should be difficult for it. Now look at the daily charts also and see here, we can find out the previous highs were lower highs we had seen here, 128 then 120, and now it is looking forward to, if it, even if it continues to trade bullish from here, the next highs should be at around 110 and 100 15 levels, this zone is going to be certainly a very strong resistance zone. So even if it is long term bearish, it has to, or it may try to achieve this zone. If it breaks past 100, certainly you can expect 108, 115 levels before it looks forward to a reversal there. But see, the extreme bullish moves must have got everything overbought. So hence have a look at it here on the 4-hour charts. See, consolidation, breakout, and this is a strong breakout towards the end. Possibly once it sustains above 93.5, certainly more bullishness can be expected. However, look at this last 3 candles. 3 candles are done. Possibility of a reversal exists here, and you can see a retracement from here. You should be cautious on the downside till towards 88 levels. 90 and 88 are going to be the stronger support zone for oil for the next week. This is one observation on the 4-hour charts. So now also let's have a look at the monthly candle here. On the monthly charts, higher lows, higher highs, and this complete movement is done within a week itself. Now if it retraces from here, drops below 90, yes, that is the level below which we can expect little bearishness. Below 88, it will call for more bearishness, and then again we can look forward to 84, 83. And see, there is a, you can see the opening of this candle is fairly above this. There is a gap left there, and there is a smaller wick out there. So yes, this gap can be filled towards the end of the month. If it can give you higher highs, it can also give you lower lows towards the end of the month. So definitely this zone is something you should be watchful of, you should be careful of at around 92, 93 levels. If it breaks beyond this, certainly it will call for more bullishness. Then we can expect it to rise more till towards 98, and then 100, and beyond that definitely it will fly further high. I expect a possible retracement on the downside. So let's see if our theory is confirmed with the help of indicators, because indicators are something which may give us a little picture of what can be expected. So on the 4-hour charts, you can see it is trading outside the Bollinger Bands, indicating that possibly it may get a pullback on the downside. You can sell there at 92 itself. Below 92, you can expect that we may see 91, 90.2, and then below that 88 levels. 88 is definitely a very strong support, trading below which you can expect a sharper drop. Directional movement, bullish, divergent. Stochastic is extremely overbought on the 4-hour charts, can look forward to a little pullback. The MACD is divergent and bullish. This is third green candle. It can continue to cross over for a sell entry there, because see the RSI too is extremely overbought. You need to be cautious there on the 4-hour charts, as these are extreme highs. Possibility of a reversal exists from these levels. Now this is on the 4-hour charts. Let's have a look at the daily charts now. On the daily charts, important thing to observe that, see, both the 50 period and 100 period moving averages are now converging and trying to curve upwards. Both have seen the bottom and trying to curve upwards, indicating that the bullishness is there because of these last 4 to 5 green candles. At the same time, one must not forget this is close outside the Bollinger Bands. The next candle definitely will make these bands expand. However, it will also increase the probability for it to get a pullback on the downside. Now on the downside, you can see the 50 period moving average situated at around 87 levels, and the 20 period moving average situated at around 84. So yes, it has to surpass these two levels for it to sustain the bearish momentum, else it may, till the time it trades above this, it may always try to attempt and achieve the 100 period moving average at around 94. That could be also one probability, and trading above it, certainly more bullishness can be expected. Now look at the directional movement. Extremely divergent, extremely bullish out here. From there we will see how it behaves, either it may continue or it may converge. That we need to look at. Let it take a shape before we take a direction. Now look at the stochastic here. This is extremely overbought here at the high out there, and yes, see the levels here were oversold. We have seen a sharp reversal, and that is what we had told you, that yes, it is at the bottom and possibly we can expect a reversal last week, and see this is precisely has happened. Now at these levels again, whenever it has achieved these highs, it has always dropped sharply if it is in bearish note. If it is in bearish mode, you can see whenever we have seen such sharp highs, it is followed with a sharper drop. and this indicates that probably there is a possibility of it to reverse from here. Now look at the MACD. The MACD is extremely divergent, extremely bullish, and it has seen the highs out there. Yes, it appears it has seen the highs. From here, possibility of it to converge exists, as in fact it has breached the highs from the previous rallies and now trading at the, but look at this rise here. There was an extreme rally out there where the peak has been seen and then it tried to converge. So this was the time when we had seen oil rally strongly. You can see these levels here. So compared to this move, this rally is hardly anything, and still the highs can be expected. But I think probably from here the conversion should start. Probably from here the drop should start. Hence you have to be cautious there. The RSI2 has again come back to the oversold zone. Now look at the weekly charts out there. On the weekly charts also, look at the 50 period and 20 period moving average. It is trading above the 100 weeks average. Yes, it is situated at around 78-80 levels. At the same time, on the upside, this is the 20 period moving average at 98 is giving it a little resistance, and same the 50 period at 93. You have to be careful in between this zone. The directional movement so far was bearish. It is trying to converge, crossover for a bullish move. I will wait for it to crossover. The stochastic on the weekly charts was oversold, and we have seen a reversal since then, and we have seen a good sharp recovery. Let's see if it breaches past this zone, then we can expect it to enter into overbought levels soon. At the same time, look at the MACD. The MACD is bearish. It is trying to converge. It has come back to the oversold zone. It is trading below zero and indicates that probability of a reversal exists, and it may continue to trade bullish. The RSI2 is looking upwards, indicating bullishness. Now look at the monthly charts. On the monthly charts, you can find the support there on the downside at 82, 83 levels, and below that there is a strong drop which can be expected till towards 7 and 6 zone. This is going to be a very strong support zone. If in this month, any point of time, if you see oil trading below 80, certainly you can go short. Just close your eyes and go short. So below 80 in the month of October, if you see oil trading below, you can close your eyes, go short. You can certainly expect that we are looking at 70 and further below levels. Directional movement so far is bullish here on the monthly charts. I'll wait for it to cross over. But look at the stochastic. This has come back to the oversold zone, and that is what we are looking forward to, a reversal here. So this is one observation. Second observation, the MACD has just crossed over on the monthly charts, and it is divergent also. This is an indication that we may see the downwards of the bearish pressure in the coming months too, unless and until a sharp reversal is seen here. Hence, we have to be alert here. The RSI2 is looking upwards. Now, we have seen the charts and indicators. Let me give you the trading levels and strategy for next week. And yes, before we give the levels, yes, if you want to learn this art of reading the charts, if you want to learn this art of trading carefully and profitably and taking the right entries at the right exits, you can join my mentorship batch. The strategies taught definitely will help you become an independent trader. My Telegram and email IDs are mentioned in the channel and video description. You can reach out to me for more details. This is a 15-day session, 90 minutes live webinars, and there are certain advanced level strategies will definitely help you become a profitable trader. At the same time, you can join my signals group where you can just trade as per the signals and profit or else you can become a pattern and thus support the effort which I am putting here on day-to-day basis for you all. All the links are mentioned in the channel and video description. Now next week, see, I will only recommend you to buy out here if you see oil trading above 92.73. Beyond this, 93.2 and then 93.8. Till here we are fine. Beyond that, I will certainly look forward to 95 and then 96.1 levels. So be careful. Yes, beyond the zone at 93.2 and 93.8, the next destination is 96, and beyond trading above which certainly 97.18 and 98 levels should be seen. The next stronger resistance at 98. Beyond that, it will fly for 100 and then it will remain long on oil. You can see further rally, then 100 to 103.8, 105 can be expected. So you have to be cautious, yes. But at the same time, yes, you can buy if it trades about 93.2, 93.8 levels. Certainly you can remain long on oil. Till the time you have to trade with a trailing stop loss and close your trades in profit. You have to put your stop loss to either cost, or you have to shift your stop loss at every target once it's achieved, such that you can close your trade is in profit. Even if it tries to reverse, your trade closes in profit. Please ensure this basic hygiene while trading. Now on the downside, I will recommend you to sell here at 92.2 levels. Below 92.2, the next target is 91.5, 90.5, and then 89.2 levels. Yes, just one correction here. Here $90 levels should be a good support also. This is a good support. Below that, you can expect that we may see 89.2 and 88. Now this is the level you should watch out for. Any move below 88 should be a good indication that it is looking forward to 86, and then 85.5, and then 84. Below 84, it will call for another round of drop to 82, 80 levels, and then the bearish trend may resume from here. So yes, take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. For 88, 86 zone, you have to trade with a trailing stop loss. This is a stronger support zone which will come into picture, while any move downwards. This is a resistance zone, this is a resistance zone, and this is the next resistance zone. Every $2 there is a stronger resistance which exists, hence you have to trade with a trailing stop loss. Let your trade close in profit, and you can re-enter if you have so much of confidence. If you think that it is going to drop, anyways you will get a higher level for you to re-enter, and hence always keep your trailing stop loss, always trade with the trailing stop loss, and always keep shifting your stop loss to cost and the first targets. Trade accordingly, trade profitably, trade with the stop loss. Thank you very much. Have a great profitable trading week ahead. Thank you.